Good afternoon, grade 12 learners. Welcome to this afternoon session of mathematical literacy. My name is Nikki Wezulu, and this lesson is proudly brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center, and the broadcast is brought to you by the Phakama Research and Development. Girls and boys, we are going to continue from where we left off last week. Remember, last week we were discussing the UIF, and then we also started the section of taxation. So just a quick reminder of what we discussed last week. We started with taxation, and then under taxation, we agreed that taxation is divided into two parts. The first part, it is your value added tax, and then we discussed that value added tax is calculated at 15%. And then remember, there's that table where I used that is going to help you to calculate your VAT amount, to calculate your VAT inclusive amount, to also calculate your VAT exclusive amount. And then the other form of tax that we went into detail with, it was the income tax. And we all agreed that income tax, it is the tax that is contributed by all individuals that are earning an income. And the amount of tax that you're paying will depend on how much you are earning and the other factors, your other contributions like your pension fund, your UIF, your medical aid, and all that. And then we also agreed that the more money you earn, the more tax you are going to pay. And then under income tax, we discussed the gross income. Guys, we've spoken so much about gross income since we started this lesson when we were doing your financial documents under your pay slip. We said gross income, it is your income before any deductions. And then we spoke about the most important thing, which is your non-taxable income, or you can even say your non-taxable deductions. We said these are the deductions that we will not tax you on them. So before you can calculate an individual's tax, you must first subtract those non-taxable deductions. And then we said those non-taxable deductions are what? Your pension fund. So if they give you a scenario and they tell you that the person contributes towards pension fund, then you know that before you can calculate a person's tax, you must subtract the pension fund. We also spoke about the UIF, that we will not tax the UIF. So before you calculate an individual's tax, you must subtract the UIF, and that is provided that they tell you that the individual contributes a certain amount or a certain percentage towards the UIF. Then we must subtract it before we calculate our tax. And then the other item, it is your donation. If a person is donating, but remember, the donation has to be towards a registered organization. You cannot just decide that, oh, my friend is running a crash there that is not registered, so I'm going to donate there. No, the donation has to be towards a registered and recognized organization. And then the other one that I did not include here on my slide is the retirement annuity fund. So even the retirement annuity fund, if a person is contributing towards this, we will not tax it. So if you are given a scenario about taxation and you see any of these four, you must know that before you can calculate tax, you must first subtract one of these if it is given, and then the answer that you have, then it will give you your taxable income. And once you've got your taxable income, then you can go to your tax rate tables and calculate the amount of tax that this person will pay. Guys, I hope this is clear. Remember, we have our active WhatsApp line, which is 082-760-2630. So you can use that number to chat with us. We'd like to hear from you, how you're finding the lesson. Are you enjoying? If you have any questions, if you have any queries, please kindly send us a message on WhatsApp. Guys, only WhatsApp messages, no phone calls, no video calls, no SMSs. And then just tell us how you are doing on this section. If you have any question, just throw in a message there, and then we'll attend to that message. And then yes, also just the summary on taxation. Like I said, that on taxable income, that the taxable income, it is the income that is going to be taxed. And then how do you calculate your taxable income? You calculate the taxable income by subtracting the non-taxable deductions. And we said that your non-taxable deductions are your pension fund, retirement annuity fund, your UIF, and your donations. So if you are given a scenario and you see one of these or two of these or three of these or all of them, then you know that before you calculate your tax, if you want your taxable income, you must first subtract all these. Then the answer that you get will give you what? Your taxable income. So in summary, the formula for taxable income, it is your gross income minus the non-taxable deductions. And what are the non-taxable deductions? All these items that I've mentioned here above. And then income tax is always calculated on your annual taxable income. Sometimes in the exam, they will give you the taxable income, and then you don't have to go through all these troubles of calculating the taxable income. But then it will be given to you monthly. And the examiner will specify that so and so and so earns a monthly taxable income of this amount. The moment you see the word monthly, you underline it, you know that because you're working with tax, everything has to be in the annual form. So you need to take that amount, you multiply it by 12, then after multiplying by 12, only then you can start calculating the tax that is payable. And then here is an example of a tax rate table. And then our tax rate table on this side, it has our taxable income. Remember, once you've decided on the taxable income, then you come to your tax rate table. And then these blocks here, these blocks, we call them the tax brackets. So the first one, from 1 to 216,200, we say this is bracket 1. This would be bracket number 1. And then this would be bracket 2, bracket 3, bracket 4, bracket 5, bracket 6, and bracket 7. So depending on how much the person is getting, and these taxable incomes, they are in annual forms. Like I said, that in tax, we work with the annual amounts. So depending on which tax bracket the person falls under, let's say the person's taxable income falls under bracket number 3. It means you are going to use this formula, this one, to calculate the tax amount that this person is supposed to pay. So when we work with tax rate tables, it's more like when you are working with the tariffs, meaning that the more money you earn, the more tax you're actually going to pay. So these brackets, they are scaled depending on how much you are earning. So the more money you earn, you can see that your scale is going down. So you are no longer included in the smaller bracket, but then you move to a bigger bracket. And then if you check the last bracket, they say is for people that are earning from 1,656,601 and above. And then why am I saying the more money you earn, the more tax you are going to be paid? Because you look at these formulas. The formula is increasing. The first one, it was just 18% of the taxable income. And then the second one, there's now 38,916 plus 26%. It is going up. Then third one, 70,532 plus 31%. So what is happening? The formula values are going up, meaning that even the tax that you are going to pay is going to increase. So the more money you earn, the more tax you are going to contribute. And then here is a quick exercise. Let's go through this one together. We still have our tax rate table for the year 2021 and 2022. And then this side, we've got the taxable income, and we've got our brackets 1, 2, 3, 4, 5, 6, and bracket number 7. And then these are the tax rates. These are the rates that are used to calculate an individual's tax. So let's go to our question number 1. Peter has an annual taxable income. You underline, okay, it is annual happy. Taxable income, he happy. The moment you see the word taxable income, then you know that you can immediately go to your tax rate table, because on your tax rate table it says here taxable income. So it means you can start using your tax rate tables. So Peter has an annual taxable income of 221,549. So since this is Peter's taxable income, under which tax bracket does he fall on? So it is 221,549. Let us go to our bracket. The first bracket is for people that have a taxable income of between 1 and 216,200. So does 221 fall under this? Absolutely not, because 221 is bigger than 216. And then we check the next bracket. 2 bits between 216 and 337. So 221, it definitely falls between 216 and 337. So the correct answer here, it is bracket number 2. So Peter's annual taxable income, it falls under bracket number 2. And then the second question, Lihle has an annual taxable income of 200,100. Again, you underline the word annual. We are happy. We don't have to convert anything to an annual form. And then we've got what? Taxable income. It means they've already done the taxable income for us. And then we go to a tax rate table. Here is taxable income. It means this has to be our starting point on the taxable income block. Let us see what is the question now. We need to calculate her annual tax that is payable. Before you can calculate her tax, you must, number 1, identify her tax bracket. So you go to the column here and then we check 200,100. It falls under which tax bracket? We start with the first one. The first one is between 1 and 216,200. So 200,100, it definitely falls under bracket number 1. So I'm going to write it down here that, okay, it means I'm working with bracket number 1. And what is the formula on bracket number 1? It is 18% of the taxable income. And then what was our taxable income? We are given the taxable income. It is 200,100. So here we've got 18%. What is the meaning of? It means multiply by how much? By 200,100. Guys, I'm going to convert this 18%. We all learned when we were doing the section of percentages from grade 10 that 18%, it is the same as 18 over 100 multiplied by how much? By 200,100. Can you guys please do this sum on your side? And then we can compare our solutions. So it is 18% multiplied by 200,100. And the answer that I'm getting is 36,018. So this is the amount of tax that Lihle is going to pay. So this is the amount of tax that she's going to pay at the end of the year. I hope you guys are following, and I hope you guys are enjoying. Remember to drop in those messages on our WhatsApp line, which is reflected on your screens there. We'd like to hear from you guys. Just anything. If you're enjoying the lesson, if you're having any difficulties, any challenges, or you have a question that you want us to assist you with that is not with us, just take a picture and send that through in our WhatsApp messages. And guys, even if you just want to send a shout out, remember to tell us your name and the name of your school. The second question, we have Carol, who has an annual. Again, I see the word annual, and then I'm happy. I don't have any problems of having to convert something to an annual form. Carol has an annual taxable income. Again, taxable income, the work has already been done for us here. Carol has an annual taxable income of 542,134. Now, what must we do? We must calculate her tax that she must pay. And then you are given 3 options, guys. As much as you are given 3 options to choose from, you cannot guess. For you to know which one is the correct answer, you need to perform calculations. So step number 1, we are already happy. We are given the taxable income. You go to your table, you go to the section of taxable income. What are you doing there? You want to identify the bracket number. You want to know which bracket you are going to work with. So this person has an annual taxable income of 542,134. Let us check on the table that 542, it falls under which bracket? We've got bracket 1, it's not there. Bracket 2, definitely not there. Bracket 3, not there. Bracket 4 is between 467 and 613. So it is absolutely on bracket number 4. So how do you answer this one? You write that, okay, it is bracket number 4. And then after identifying the correct bracket, then you rewrite the formula that is given there. And the formula there is what? It is 110,739 plus 36% of the taxable income. What is our taxable income? It is this amount here, which is 500, I'm going to put it in the bracket, 542,134. And then minus, because they say above this amount, it means we need now to subtract this amount. Minus 467,500. Girls and boys, I want you guys to do this, to simplify this, calculate the amount of tax that Carol is going to pay, and then one of these 3 answers is correct. And once you get it, please send in your answer into our WhatsApp group chat. Remember to mention your name and the name of your school. So I'm going to give you guys just about 1 minute to quickly do this. Don't go away.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, guys. I hope you got the answer now. And guys, I'm still waiting for your messages. Please keep them coming. No one has sent in anything yet, but then let us quickly do it together so that we can check if you are on the right path or not. So how do we do this, guys? You do this step by step. And then remember here, we apply the principle of BODMAS. So we are I'm going to rewrite this 110,739 plus, I don't like working with symbols, guys, and I know most of you make a mistake of instead of pressing 36% on the calculator, you end up pressing just 36, and then now it changes everything completely. So I'm gonna write this as 36 divided by 100. And in mathematical literacy language, of means what? Of means multiplication. And then open the bracket, and then you say this minus that. Let's do it together. It is 542,134 minus 467,500. And then I'm getting 74,634. I hope you guys are following up to so far. And then I'm going to move it here because I don't have enough space. And then I'm going to continue with the 110,739 plus the mistake again that most of you are making here. You tend to say 110 plus 36%. It's wrong, guys. It's wrong. Remember, with BODMAS, you work out first what's inside the bracket, and then you multiply, and then addition is your last step. So now I'm going to say 74,000 multiplied by 36%. And then let's see what is the answer that I'm getting. I'm getting 26,868 and 24. And then you add the 2 plus 110,739. What am I getting? I'm getting 137,607 and 24 cents. So now we go and check from the options that were given to us. So according to our calculations, Carol will pay an amount of 137,607 and 24 cents towards tax. And remember, this is the amount of money that she will pay for the year. So let us go and check. Is it option number 1? No. Is it option number 2? Absolutely. So the correct answer here, it is option number 2. So even if you come across questions like this in the exam where you have to choose the correct option, remember, you don't just choose. You first do your calculations, and based on your calculations, that is when you'll make a decision that I'm choosing option A, option B, or option C. So this is the amount of tax that Carol is going to pay. And then the next question, guys, we're still working with the same tax rate table. Brenda has a monthly gross income of 33,846 and 16 cents. Remember, what is gross income? It is the income before deduction. So the whole income before anything is subtracted, it is that 33,846 and 16 cents. So she contributes 2,538 and 46 cents per month towards pension fund. If you are in the exam, you underline your pension fund. And 338 rands and 46 cents per month towards her UIF. You underline your UIF. What is coming into your mind? You are already thinking that your pension fund, that is non-taxable. UIF, that is non-taxable. So it means now I haven't even looked at the question. If I'm going to calculate this person's tax, I cannot tax the pension fund. I cannot tax the UIF. So before I calculate their tax, I must first subtract the UIF. I must first subtract the pension fund. Then the balance that is remaining, I'm going to calculate tax on that balance. Are we okay, guys? Sharp. So now we need to calculate her annual taxable income. Remember, what is the taxable income? It is that income that we are going to use to calculate tax. Again, another problem. Learners confuse these questions. When a question says calculate the taxable income, people tend to calculate tax. When they want taxable income, they want this value here, and then it ends there. You don't do any tax calculations. So now let us determine the taxable income. Remember, we have a formula for taxable income, and then we agree that taxable income, it is equals to your gross income minus your non-taxable deductions. Do we have the non-taxable deductions? Yes. And how many do we have? We've got 1 pension fund and then 2 from UIF. Now let us substitute our values. What is our gross income? It is 33,846 and 16 cents minus, what is our non-taxable deduction? The pension fund, which is 2,538 and 46 minus the UIF. How much is the UIF? It is 338 and 46. And then what is the answer? Guys, calculator is very, very, very important. For you to do well in Mathslit, you need a proper functioning calculator. So if you don't have a calculator, unfortunately, you won't survive in this subject. You need a calculator and a well calculator, guys. So you subtract 338,46. And then what answer are you guys getting there? Because this side, I'm getting 30,969 and 24 cents. But remember, this is from the monthly course. And what was the question? The question wanted us to calculate the annual taxable income. So it means this is our monthly taxable income. Now, if you've got a monthly value and then you have to convert it to annual, what do? How do you convert from monthly to annual, guys? Send in the answer in your WhatsApp, please. It is 30,969 and 24. If you want to convert to annual, then because this is monthly, you are going to times it by what? By 12. So I'm just going to take the answer and times by 12, and then we get 371,630 and 88 cents. So this is the taxable income for Brenda. So we end here because the question wanted us to calculate the taxable income. If they wanted us to calculate her tax, we were going to continue and now come to this side of the table. First of all, we would have to identify which tax bracket to use. After that, we would come this side now and calculate her tax. But because of the question is very specific. They just want the taxable income. So we are going to end here for this question. Guys, remember to send through your questions on our WhatsApp line. You only send your questions. If you want to take a picture of your question, you can take a picture and send it to our WhatsApp group. And even if you don't want to ask a question, you just want to send a shout out, do so. And remember to always mention your name and the name of the school so that I can give you a shout out also. And then number 5, guys, we have Mr. Reed, who currently earns a basic monthly salary of 13,245 and 50 cents. So you already underline that this is a monthly salary. The following amounts are deducted from his salary: 35 rands for union membership. He pays 6% of his basic salary towards a retirement annuity fund. He also pays 512 rand every month towards medical aid. So that is the information that we have. Now here is the question. What is his monthly contribution towards retirement annuity fund? What do we know about the retirement annuity fund? We just know that it is 6% of his basic salary. So how do we determine now the amount? They've given us the percentage, so the question wants the amount. We know that the retirement annuity fund, it is equals to 6% of his basic salary. So then now, let's now write this using the maths language, the mathematical literacy language. 6% is the same as what? 6 over 100. What is the meaning of? It means multiply. What is the basic salary? It is 13,245 and 50 cents. Remember I said this is your best friend in Mathslit. So you punch this on your calculator. 6% multiplied by 13,245.50 equals to what? Equals to 794 rands and 73 cents. So this is the amount of money that Mr. Reed is going to contribute towards his retirement annuity fund. And then this is a continuation of question number 5. We still have Mr. Reed, and he's still earning a monthly salary of 13,245. The following amounts are deducted, still the union membership, but then this time the retirement annuity fund is the amount of 794.73 cents instead of the 6%. We also have medical aid, which is 512. Now here is the question: what is his annual taxable income? So for us to get the taxable income, remember we have a formula. We said that the taxable income is equals to your gross minus your non-taxable deductions. So guys, let's go back to our information. Do we have the gross income here? We have a basic, and in this case we are going to treat our basic salary as our gross income. That is what we are having. So I'm going to take this 13,245.50. We minus. Do we have any non-taxable deductions here? Is a union membership a non-taxable deduction? No, it's not. Retirement annuity fund? Yes, it is a non-taxable deduction. What about medical aid? It is not a non-taxable deduction. So out of all these deductions that we are having, there's only one non-taxable deduction, and it is what? It is your RAF, which is your retirement annuity fund. So we subtract how much? 794 rands and 74 cents. So you go to your best friend, your calculator, to say 13,245.50 cents minus the rough amount, which is equals to 12,450 and how much? And 77 cents. Did we answer the question, guys? The question wanted what? The annual taxable income. And what do we have here? This is the monthly taxable income. And then remember I said, how do we move from monthly to annual? You take this amount that you have and then you times it by 12 so that we can get the annual amount. So you say times 12, it is 194,409 and 24 cents. So this is the annual taxable income for Mr. Reed. Guys, I know you are not seeing this for the first time. This is actually revision for you guys. I hope you are enjoying it. And if you could not understand it, maybe you missed it in class, you didn't understand your teacher. So this is your chance to actually catch up and make sure that you iron out all the issues you've ever had with taxation. So by so saying, guys, remember to keep those messages coming. And then, guys, what we've been doing now, we're working with the taxable income. And then after your tax rate tables, you will see that the next table, it is actually the tax threshold. What is the tax threshold? When you talk about the tax threshold, it is when the taxable income is, if your taxable income, remember what is your taxable income? We worked with the taxable income here. So if this taxable income is higher than the tax threshold, then an employee must pay tax on it. So they will give you a limit on the tax threshold to say if you are this age and then this is the tax threshold. So you must know that if your taxable income is more than the given tax threshold, then it means you need to pay tax. But if your taxable income is less than the amount that is given on the tax threshold, then it means you are not liable to pay tax. So if your then the taxable income, remember again, for you to determine your taxable income, it is your gross salary minus your non-taxable deductions. Are you okay? So the tax threshold, it actually assists us in informing us if a person is liable to pay tax or not, based on their age and their taxable income. So on the tax threshold, we work with the taxable income. So guys, like I just said in the previous slide, that the tax threshold, it specifies the minimum income that a person can earn before being liable to pay tax. So the tax thresholds are based on the age groups, the age group of people that are under 65. Like I said, that it specifies if a person should be paying tax or not, depending on two things: on the age of the person and on the taxable income of that individual. So there are three age groups that are involved, that if you're under 65 and then you are earning less than the given amount, then you are not supposed to be paying tax. If you are 65 years and older and you are earning less than the given threshold, it means you are not supposed to be paying tax. If you are 75 years and older and you are earning less than the given amount, then you are not supposed to be paying tax. Again, I'm going to remind you, on the tax threshold, we work with taxable income. So here is a quick quiz, guys. We've got a tax threshold for 3 years actually, for 2022, 2021, and 2020. Let us look at this one of 2022, because this is the current year that we are in. What does this mean, the first block? It means that if you are under 65 years old and you are earning less than 87,300, then you will not be paying tax. That is the first meaning. Or if you are under 65 years old and you are earning a taxable income that is more than 87,300, then you should be paying tax. And then the same with the people that are 65 years and older. It means if you are 65 years and older and then you have a taxable income that is less than 135,150, then you are not supposed to be paying tax. Or if you are 65 years and older and you are earning more than 135,150, then you should be paying tax. If you are 75 years and older and you are earning less than 151,100, that is your taxable income, it's less than 151,100, then you are not liable to pay tax. If you are 75 years and older and your taxable income is more than 151,100, then you should definitely be paying tax. And then you explain this the same way, you explain this the same way. So let us look at our quick quiz question. They say Daphne is a 30-year-old receptionist, so we know that she falls here because she is 30 years old. She earned 82,500 in 2020, so we are going to focus on this block of 2020. So we are working with under 65, the year 2020. She did not earn any extra income, but she contributed 550 a month on her retirement annuity. She did not have to pay tax in 2020. So you need to answer true or false. Again, this type of a question, you cannot just guess and say it's true or it is false. You first need to do your calculations, or you first need to give your analysis, to do your analysis. Then you can make a conclusion whether the statement is true or it is false. So let us look at the information here. She earns 82,500 in 2020, and then she contributed 550 a month on her retirement annuity. So guys, this 82,500, it is actually an annual amount. But what we have here, we have a monthly contribution of 550. So let me write it down here. For retirement annuity fund, it was 550. I'm going to multiply this 550 by 12 because the earning, it is for the year. So I must also make the contribution and convert it to a year. So I'm going to take 550 and then multiply it by 12 to give me, so this times 12 to give us how much? 6,600. So she did not have to pay tax in 2020. Before we can decide whether she should pay tax or not, we must first know her taxable income. Do we know her taxable income? No. And how do we determine a taxable income? It is the gross minus the non-taxable deductions. Do we have the non-taxable deductions here? Yes. What is it? It's the retirement annuity fund. So let me check her taxable income. The taxable income would be how much? It would be 82,500 minus how much? Minus 6,600. So let's check. 82,500 minus 6,600, which gives us an amount of 75,900. So this is our taxable income. TI for taxable income. Now let us go back to the original question. They say, so if this is a taxable income, she did not have to pay tax in 2020. Let us go to 2020. Here is 2020 for a person that is under 65. What is the tax threshold there? It is 79,000. So the only way that a person would not pay tax here, it is if they are earning less than, their taxable income is less than 79,000. And how much is her taxable income? It is 75,900. So this is absolutely true. She did not pay tax in 2020 because her taxable income is less than the given amount in the tax threshold for that particular age group and for that particular year. I hope you guys understand. Please keep those messages coming, guys. And then the second question, we have a 67-year-old person. Very important. So 67, you ask yourself, do they fall under 65? Nope. 65 and older, yes, absolutely, because it is below 75. So 67 definitely falls here on 65 and older. So a 67-year-old person receives 10,100 income per month in 2020. So on our table, we are going to be looking at this column of 2020. He will have to pay a tax of 2,500 per month. True or false? Before you can even decide how much tax this person must pay, you must first ask yourself, do they even qualify to pay tax? Are they even supposed to be paying tax? Let us check that, guys. The income per month is how much? It is 10,100, but this is per month, and there isn't any deductions that are indicated here. So we need to know. So we'll take this now as the taxable income because there's no other deductions that are mentioned. Therefore, this becomes our taxable income, but it's monthly. So we will multiply it by what? By 12. So our monthly income multiplied by 12, it gives us a total of 121,200. Remember, our person is here older than 65, and then for the year 2020. So which amount are we looking at? We are looking at this amount. So for a person to start paying tax, they must be earning more than 122,000. And our client currently is earning how much? 121,000. So is this person even supposed to be paying tax? No, this person is not supposed to be paying tax, because according to the tax threshold, their taxable income is way less than what is stipulated on the tax threshold table. So they say he will have to pay a tax of 2,500 per month. This statement is absolutely false. Guys, I hope you agree with me. If you agree with me, just send a message on WhatsApp to say, ma'am, I agree, or send a thumbs up. If you don't agree, again, I don't know why you wouldn't agree with us though, so don't send anything if you don't agree. I'm joking, guys. You can send whatever you want to send. And please, yes, you can also send your shout outs. Remember the most important thing, your name and the name of your school. When we take a short break, I'll come back and give a shout out to all those people that have sent us some messages. And then, guys, we have the tax rebates. You also see this when you are working with your tax rate tables. So the first table is your big tax rate table, and then you've got your tax threshold table, and then you've got the third table. There would be your tax rebate table. So what is a tax rebate, guys? A tax rebate is a special relief, but I love the word discount. It is a discount that is given to the taxpayers, because you know, as taxpayers, we are all very loyal to the SARS. We make sure that every month they get their tax money with no defaulting whatever. So now, when we do our tax returns at the end of the year, they find that, you know, this person has been good. They've been contributing every year. So when we calculate her tax, we are going to give her a special discount. And that special discount, we call it what? We call a rebate. So rebate is a special discount that is given to all the taxpayers. And then again, the amount of rebate or discount one will receive is going to depend on the age of the person. So from here on now, we know that when we are given a tax statement information, very, very important, they must always mention the age of the person. The age of the person helps us so that we know how much discount a person should receive, because the older you get, the more discount you are going to get. So this rebate, it is subtracted after income tax has been calculated. So after you calculate your income tax, after that annual tax that you've calculated, then you subtract your rebates immediately. That is where you're going to take out the discount. You give the discount. And then every person qualifies for a primary rebate. We have 3 types of rebates. We've got the primary rebate, secondary rebate, and your tertiary rebate. So the first one, which is the primary rebate, everyone that is paying tax qualifies for that one. And then older people are granted additional rebates. Like I said, that the older you are, the more discount you are going to get. What does this mean? Let us discuss it now looking at the table. We have the tax rebate type. I said we've got primary, secondary, and your tertiary. So for primary, it is for people that are below the ages of 65. So for everyone that is below the age of 65, meaning that 64 years going down, they qualify for a special discount of 14,220. So if you were to calculate my tax, I'm less than 65 by the way, guys. If you were to calculate my tax, after calculating my tax, you will give me a discount of 14,220. It means you will have to subtract an amount of 14,220. Now, if a person is between the ages of 65 and 75, this person is now older, very old, then this person qualifies for the 14,220 discount, but because they fall under this age group, they get an additional discount of 7,794. So if you were to calculate a rebate for a person that is between the ages of 65 and 75, then you will say 7,794 plus 14,220. And then the third rebate is your tertiary rebate. And then this one is for way older people. It's for people that are 75 and older. So if you're calculating a rebate, how much discount you must give someone that is maybe 8 years old. So for that person, you will say 14,220 plus 7,794 plus 2,601. So if a person is in the tertiary rebate, they qualify for all the three rebates, which explains my statement when I said that the older you get, the more rebate you are going to receive. And then after your tax rebates, guys, you now have the last table on your tax rate tables, which is your medical tax credits. Guys, sometimes you get people, you'll get a scenario, and then they will tell you that the taxpayer also contributes towards medical aid. And when a person contributes towards medical aid, even if they can give you the amount, we tax medical aid. We will tax that amount. A special benefit that is given to the taxpayers that are contributing towards medical aid, it is calculated using this table. So in actual fact, a person that contributes towards medical aid, they will get an additional rebate or they will get an additional discount. So when a person contributes towards medical aid, we tax the medical aid. We're not even going to subtract the medical aid before we calculate tax. We tax it. Then after calculating tax, then we subtract the rebates, these rebates, remember? And then after subtracting these rebates, then we subtract the medical tax credits. And then how do you know how much credit to give? We use this table to guide us on calculating how much medical tax credit a person is supposed to receive. And what you must take note of, guys, is that the medical aid tax credit table, it is always in a monthly format. And remember what I said when I started, that in tax, we work with annual amounts only, unless stated otherwise in the question. But because this is monthly, when you calculate your tax, before you can subtract it, you must make sure that you convert the answer to your annual form. Let us have a practical example. Let us say, Mem Zulu, I am contributing towards medical aid. And in my medical aid is myself and my 2 children. So it means I'm paying medical aid for how many people? For 3 people, which is myself and the 2 children. So if you wanted to calculate how much discount am I going to get at the end of the year, you will say, okay, Mem is contributing medical aid towards 3 people. So if I want to calculate Mem's discount, Mem is obviously the main member. So the discount for Mem would be 310. And then, guys, the first dependent, it doesn't have to be a spouse. Even a child can be the first dependent. And in my case, it's myself and 2 kids, meaning that my first kid, my first child that is registered on the medical aid is going to be my first dependent, which is how much? It is 310 for the first dependent. And then the second child that is on the medical aid is going to be my second dependent, and they're going to get a discount of how much? Of 209. So let us add 310 plus 310 plus 209. It gives us 829. But remember, this is a monthly discount. So if you want the annual credit, you will take the 829 and multiply it by 12, because this one is monthly. It's indicated there that it is the monthly credit. So 829 multiplied by 12, you are going to get how much? 9,948. So guys, this is the annual discount that I will get if I'm paying medical aid for myself and for my 2 children. So if you are calculating my tax, you would calculate my tax. After calculating my tax, you say minus the primary rebate. After subtracting the primary rebate, you will subtract this 9,948 of medical aid. And then the answer that you get, that is the amount of money that I'm going to pay towards my taxes. And then here is an activity, guys. We've got Marius. Marius is 66 years old. When you have a question like this, guys, by the way, this was adapted from the National Senior Certificate 2021, paper 1. So it's a very recent paper. When you do your revision, you will come across something like this. You are in the exam now. You see Marius, he is 66 years old. You underline 66 years old. He earned an annual taxable income. You say, yes, they've done the taxable income for me, and it is the annual form. And how much is the taxable income? It is 551,762 for the 2019-2020 tax year. And during the tax year, Marius was a member of a medical aid fund. You underline that is very, very crucial information. He contributes towards medical aid, and he contributes for who? Himself, wife, and 2 children. So he's actually paying medical aid for how many people, guys? For 4 people, because remember, he's also a person. It's him, his wife, and the 2 kids. So I'm gonna bring it here that okay, so the medical aid is actually for 4 people. Remember, you are in the exam, you are gathering your information, you are preparing for war. So this is more like you are learning about your enemy, so that when you go and attack, you go to the battlefield well prepared and armed. The table below shows the tax rate table for the 2019-2020 tax year. So this is our tax rate table, and then we have the tax bracket, we have the taxable income, the formula, which is the rate that we are going to use. We have the tax rebate table, we have the medical aid table. So we are here, we've got all the information that we need. Now let us see what the question has got for us. The question now is 1.1. Identifying which tax bracket Marius falls in based on his taxable income. Remember, the examiner was very nice. He actually gave us the annual taxable income, and he said it is 551,762. Now you go back to your table and you ask yourself, 551,762, and it's already annual, so we've got nothing to do here. It falls under which bracket? You go to the section of taxable income, you check 551. Does it fall between 0 and 195? No. 195, 305? No. 305, 423? No. 423, 555? Absolutely, because it is 551. Therefore, it is less than 555, but it is more than 423. So the correct bracket here, it is bracket number 3. This question, guys, it's simple, straightforward, level 1, 2 marks for free. So the correct answer here would be bracket number 4. You don't complicate it. Your peers, your friends, when they answer this question, they rewrite the whole formula. You're not answering the question when you do that. To a straightforward, what do they want? The tax bracket. And you have a column for tax brackets. It means your answer must either be 1, 2, 3, 4, 5, 6, or a 7. Nothing less, nothing more. And then the second question, guys, we're still on Marius, who is a 66-year-old person, and that had an annual taxable income of that amount. So now, calculate the tax rebates that Marius qualifies for the 2019-2020 tax year. Girls and boys, I want you guys to try this one just for 1 minute. Remember, when it comes to the tax rebate, the age is very, very important. So look at this one and calculate the rebate that Marius is going to receive. So I'm giving you 1 minute. As soon as we are done, we'll do it together. Then you can compare your solutions. Welcome back, guys. Thank you so much, guys. We are getting your messages. I just want to send a special shout out to Sbonise and Spoiler from 12F in Buhlebuzile. And it seems like we've also have guests from other provinces. We have Sbongiseni Mbaka from the Eastern Cape. Welcome, Sbongiseni. Guys, keep your messages coming and I will give you a special shout out. And if you have any questions, keep them coming. Our team is here and waiting for you. Now, let us do this one together. We are supposed to calculate the tax rebate for that Marius qualifies for. Remember, he is 66 years old. So since he's 66 years old, he actually qualifies for the primary rebate. Remember, the primary rebate, everyone gets it. And then there's a special one for people between the ages of 65 and 75. And Marius is how old? He is 66 years old. So do we all agree that he also qualifies for the secondary rebate? Because 66 is definitely above 65. So if we calculate his rebates, we will say for rebate, he's going to get 14,220 plus 7,794 because of his age. He qualifies for the two rebates. So in taxation, the age is very important. Now let's do this. It is 14,220 plus 7,794. So we add the two. The rebate is how much? It is 22,014. So this is the rebate. This is the discount that Marius will receive once his tax has been calculated. Remember, you haven't started calculating his tax. And then the third question, we must determine his total annual medical aid credit. Actually, medical aid credit for himself, wife, and the two children. Remember, from the information that we were given, we actually noted that, okay, it means he's paying medical aid for 4 people. Therefore, he will receive discount for how many people? For 4 people. So the first person, which is the main member, will get the 310. Person number 2 will get 310. Person number 3 will get 209. Person number 4 will get 209. If there was a person number 5, person number 5 will get 209. If there was person number 6 would get 209. If any additional member after all these will get what? The last credit, which is 209 in this case. Now let us calculate the tax credit. The tax credit would be equals to, it would be 310 for himself plus 310 for his wife plus 209 for one child plus 209 for the second child. And then let's calculate. It is 310. I'm sure you guys have answers there. You send through your answers. Plus 310 plus 209 plus 209. So you add all the 4 values. You've got 1,038. But remember, guys, this is what? This is monthly. Because from the table there, it says monthly. And what was the instruction? You must determine what? The annual. And how do you determine the annual? You take your value, 1,038, which is monthly, and then you times it by 12. Let's take the 1,238 times by 12. What is the answer? It is 12,456. So this is the annual credit that this guy is going to receive. So after you calculate his tax, you subtract the rebates, and you are also going to subtract this 12,456. Guys, still the same story about Marius. We've got his age. We know that his taxable income is 551,762. And then we know that he's a member of a medical aid. And then now they say the table below shows the tax table for the 2019-2020 tax year. So what is the question now? We need to calculate his annual tax that is payable for the 2019-2020 tax year. Now I want you guys to follow all the steps that you have learned. You apply all the principles and then you calculate his tax. This one is a bit challenging and it's a bit longer. So I'm going to give you guys a 3 to 4 minutes to do this one. You do it step by step, and I want you guys to share your solutions in the group. Please share your solutions, and then once I've seen enough solutions, I will come and then we'll discuss it together, and then you can mark yourself from there. So you need to calculate the tax. Remember, they've already given you what the taxable income, and remember, after calculating the tax, you must subtract the rebate, you must subtract the medical aid, and we've already done that. Remember, guys, ne? Yeah, on the next slide, yes, I've actually summarized it for you that the annual taxable income is this amount, and this is the rebate that you will get. We already calculated it, and then this is the medical aid discount that is going to get. We also calculated that together. So I want you to calculate what? His annual tax payable. Let's go for it, guys. I'm giving you 3 to 4 minutes to do it quickly, and then we will discuss it together. Don't go away.
Excellent. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, guys. I hope you are done and you have your solutions. And thank you so much for those messages that are coming in. We are receiving them. Guys, please remember to mention your name and the name of your school. A very special shout out to Tsogofatso Mohona. Tsogofatso, we got your message, Nana, and we are so happy that you are enjoying the session. And guys, a very special shout out to all the matric learners from PT Kulu and Buhlebe Zulu. They are in, at all the sessions every week. They are there, they are participating, they are sending in messages. So we really appreciate that, guys. If all the learners can do the same, send in your messages, just a shout out. Even if you don't have a question, a special shout out, it will really, really make us happy. So guys, let us go back to our question now. Here, remember, we're supposed to calculate his annual tax. And what do we have? We have the annual taxable income. We have the rebates. We've already calculated them in the previous questions. We also have the medical aid of 12,456. So when you calculate someone's tax, step number 1, what do? You need to identify the tax bracket. So now the tax bracket, what is this person's taxable income? It is 551. Because it's written taxable income, you come to this table, this column of taxable income. It is 551. And then I think we answered this question again, guys, and we agreed that he fell under bracket number 4. So now you look at the formula for bracket number 4 and you rewrite it. You rewrite the formula as it is. We agreed that it is bracket number 4. And what is the formula then? It is 100,263 plus 36% of the taxable income. What is our taxable income? It is 551,762. Because it says above, you know that you have to subtract 423,300. And then we break it down. We are not in a hurry. We are not going to rush it. We say 100,266 plus 36%, guys. I'm going to write it as 36 over 100. Mathematical literacy language of means what? It means multiply. And then inside my bracket, I'm going to use my best friend to simplify. It's 551,762 minus 423,300. It gives what? 128,462. And then the next step here is very, very important. You apply BODMAS. What does BODMAS say? We are first going to multiply before we can add. So addition will come last. Then we'll say 100,263 plus 128,462 multiplied by 36%. It gives us an answer of how much? Of 46,246 and 32 cents. So you add this, you add with that, so that plus 100,266, it gives me 146,509 and 32. What is this, guys? This is the tax that this person must pay. But remember, I said for every taxpayer, there is a special discount that we must give. And that discount that we must give, it is your tax rebate. So from this, we must give this taxpayer a discount of a rebate. So we'll say 146,509.32. You minus the rebate. Because this taxpayer also pays for medical aid, you must also subtract the medical aid credits. And then let's bring it down here. It is 146,509.32 minus the rebate is how much? It is 22,014. What is the medical aid? It is 12,456, which is equals to, guys, you punch in your calculator, minus 22,014 of the rebates, minus the medical aid is how much? It is 12,456, which will give us how much? 112,039.32 cents. So this is the annual tax that this guy is going to pay. Once you've subtracted your rebates, once you've subtracted your medical aid. Now, girls and boys, this is actually the last question on taxation for today. I know a lot of learners, they struggle with this section. So I want to advise you that the only way you are going to get it, the only way that you are going to understand it is if you practice this section as much as possible. There are so many resources that are available for grade 12. You attend your C classes, you practice them, because if you practice it, you are definitely going to get it. And if you still have challenges, it is not the end of the world. Taxation is not mathematical literacy. It is a section of a mathematical literacy. There are the basics that you must know. When you talk about taxation, the first part, you must make sure that your gross amount, it is in an annual format. So when they give you the gross amount, you must make sure that it is in an annual format. Let me just write it there. Let us summarize our section of taxation now. You must make sure that when you are giving the gross amount, it must be in the annual format. Annual. It must be in the annual format. And then before you can calculate your tax, you need to make sure that you've got your taxable income. Remember the taxable income? It is the income that we use to calculate our tax. And then what is the formula for our taxable income? We said that our taxable income, it is your gross minus what? Your non-taxable deductions. And what are the non-taxable deductions? It is those deductions that we cannot tax. We cannot calculate tax on those deductions. Meaning before you can actually calculate an individual's tax, you must first subtract those non-taxable deductions. Then the balance that you have becomes your taxable income. And once you have your taxable income and it is in an annual format, then you go to your tax rate tables. You go to your tax rate tables. What are you going to do there? You are going there and then you identify the tax bracket, the bracket number. You decide, am I going to use bracket number 1? Am I going to use bracket number 2, bracket number 3, bracket number 4? Depending on how many brackets you have. And remember, the issue of brackets, you don't just choose what you like. You will always be guided by your taxable income. Your taxable income will indicate to you that whether you are using bracket 1 or bracket 3 or bracket 4 or bracket number 6. And once you have used once you've decided on the bracket, you rewrite the formula. Rewrite the formula. After rewriting the formula, you substitute your values. And then after substituting your values, you use BODMAS to simplify. Use your BODMAS to simplify, and then after simplifying, you get your answer. And then the answer that you get, it is the tax amount that the person have to pay. And then once you've determined the tax amount, guys, after you've determined the tax amount, you need to give that discount. Remember, every smart business person, they know that they need to give discount to their loyal customers. And then as taxpayers, we are very loyal customers towards the South African Revenue Services. So when you are done calculating the person's tax amount, you must always now, you must remember to do what? To subtract your rebates. And if a person is contributing towards medical aid, you must also remember to subtract what? The medical aid credits. And the medical aid credits, you must make sure that they're in the annual format. And then just something else, guys, remember the rebates, it depends on the age of the person. Sometimes a person may qualify for just one rebate, which is the primary rebate. Sometimes a person may qualify for 2 rebates. Other times, a person can also qualify for 3 rebates. So depending on the scenario that you are dealing with, you need to read your information very carefully and make your proper decisions. And then once all these steps have been followed, you therefore have the total tax that is payable. So if you can remember all these steps, I'm telling you, you will never ever go wrong on the section of taxation. Now, girls and boys, finally now summarizing everything that I've started with you from the 10th of January when we started with our financial documents, and then we did the section of UIF. Remember, we agreed that UIF, it is your unemployment insurance fund, and then as the employee, you are contributing 1% towards the fund, and the employer must also contribute 1% to the fund, and then in total, the total that is put in the fund, it is what? It is 2%. And then after UIF, we started the section of VAT, which is value added tax, and it's very, very important that you know the acronym VAT, that stands for value added tax. And then VAT is also calculated using the percentage of 15%. Some of you might use previous question papers for revisions, or you might be working with a textbook. Most of our textbooks might be outdated. So when you see the value of VAT in the textbooks, it will say 14%. But please take note that we do not work with 14% anymore, but we work with strictly 15%. And then, guys, after VAT, then we started the section of income tax, where we spoke about your gross income, your taxable income, your non-taxable deductions. There was just so much information that was involved, but I hope after today's lesson, all the misconceptions, all the issues and problems with regards to taxation and income tax in particular have been resolved. Now, guys, just to summarize everything, we know we spoke about your gross income, and we agreed that gross income, it is all the earnings that you receive before any deductions. So if you take your gross income, you subtract your deductions, you will get what? You will get your net income. But what are deductions? We've been busy saying deductions. What are deductions? Deductions is your allowed deductions, such as your contributions towards retirement, pension fund donations, and etc. And then if you've got your gross and then you take out your non-taxable deductions, the answer that you get, the balance that we have, it will then give you what? Your taxable income. So your gross minus your non-taxable deductions, it gives you your taxable income. And how do you define taxable income? It is if your taxable income is below the threshold, or sorry, this is not the explanation. This now explains the threshold table again, that if your taxable income is below the threshold, then you do not pay any tax. This is what I emphasize, guys, that when it comes to the tax threshold, we use your taxable income. And if your taxable income is less than what is specified on the threshold, depending on your age, it means you will not pay tax. And if your taxable income is more than what is provided on the threshold, then you should be paying tax, depending on your age again. And then, guys, when you calculate our tax, we calculate our tax using what? The tax rate tables. And we've discussed the tax rate tables where we identified the tax bracket, where we chose the taxable income, and then we use the given formula to calculate the tax that is payable. So if you have your taxable income, then you can now tax the person, and then when you subtract the tax, after calculating the tax, the next step now is to subtract the rebates. And then we have 3 types of rebates. You've got your primary rebate, secondary rebate, and your tertiary rebate. So what will guide you on the type of rebate that you must give, it is the age of the person. And the older the person, the more rebates they will receive. And then after subtracting the rebates, there's also the medical aid credits. So the medical aid credits, they work the same as the rebates because they are also a special discount. But this special discount of medical aid credits, it is not given to just anyone. It is only given to the individuals that are contributing towards a certain medical aid. So if you don't contribute towards medical aid, you don't qualify for the medical aid credits. So you don't even have to scratch your head about that. If a person must get the medical aid credits, the examiner will mention that Mem Zulu is also a member of a medical aid. If they don't say anything about my medical aid, then when you calculate my tax, you cannot give me a discount that you will give for people that are paying medical aid. And then remember here, you've got your gross income, you deducted your tax, and then any other special deductions that are taking place in your payslip. It can be your loan from the employer, the union contributions, medical aid fee, it doesn't matter. From your gross, after all these other deductions, now the balance that is left now, it is what? It is your net income. And what is net income? It is your take-home salary. Or I can hear someone else shouting that net income, it is actually the income after deductions. So that salary that goes into your bank account from the employer, that is your net income. It means that is the money that you can use as you please, because all the important things, they have been deducted from your pay slip. Now, girls and boys, finally now officially, we've come to the end of the section of financial documents and taxation. I hope you guys learned as much as you could. I hope I have helped you guys erase some of the misconceptions that you've got. And I hope, guys, most importantly, that after today's lesson, you actually see that this taxation has nothing. It is actually very nice. It is enjoyable. It doesn't bite. Guys. So go and get those previous exam question papers on taxation, and taxation is not life. If you are struggling with taxation, it is not the end. Mathslit, we've got so many topics under finance alone, and a whole question paper 1 alone, it is out of 150. So if you don't do well in taxation, that does not mean that you are going to fail that question paper. So with all that being said, guys, good luck with the next coming lessons. Please remember to continue washing your hands, put on your mask, social distance until we meet again next time. Enjoy your afternoon. Thank you.